to Price Discovery. We have got Alexander Markl, Michael Mtenga, myself, John Cutrone, here every week to talk about markets, what we're seeing, what trades we like. An incredible week. What a week. Some traders wait the whole year for a week like this. Funny enough, stock's pretty much flat, but every debasement trade asset out there, hard asset, scarce asset, uh, basically got a 20% teleport upwards. So here to break all that down, we always like to start off with Bitcoin. I always like to start off with Alex. So we're going to kick it over to Alex. What the heck happened with this God candle that we're looking at here?
Yeah. I think one victory lap won't cut it this time. I mean, yeah. A lot of things happened.
I'll give you your flowers. You absolutely called this last week. You're like, I'm going long right here.
Yeah.
I doubted you.
Yeah. I mean, it was definitely lucky. Like a lot of things came together at the right time. But yeah, I think that the trigger for this whole move has been, on one hand, just like the overall strength that we had seen in the prior weeks. You know, there's been Sailor who was selling some Bitcoin to shore up cash. Some of the other digital asset treasuries have been selling, and that flow just kind of got absorbed, right? That was my initial argument for opening up this long trade. And then we got some interesting announcement from Debasement and the U.S. Treasury, which kind of looks like yield curve control, if I'm understanding it correctly. Right? Like I haven't dug too deep into it, but it looks like yield curve control.
It's funny. Like, it's technically not yield curve control, but it's basically yield curve control, and it's technically not QE, but it's basically QE.
I think I've heard that before.
Like, this is like an Operation Twist. I don't know, it might be a throwback, but yeah, like they expanded the balance sheet, they're shortened,
duration,
lengthened the short end. It's basically
which is more or less like stimulative for like markets, right?
It's fiscal stimulus. It's coming from the Treasury. QE has technically needs to come from the Fed, Federal Reserve. But yeah, it's expanding the balance sheet either way, and you are controlling the yield curve either way. And it's basically the money printer is fired up again.
Yeah. So that's I would kind of pinpoint it to that announcement, because that's sort of when that move really started to kick into gear on Bitcoin. The basement trade is back. Money printing narrative is back. That's exactly what Bitcoin is supposed to be for, right? Like this digital gold debasement narrative is back, and Bitcoin is the hedge. And yeah, here we are, right? On the way, tons of short liquidations on that move from like 65 to 70. Tons of shorts getting taken out. I think we saw record short liquidations on that candle. Which is funny, right? Like, market wasn't doing anything, and people just got caught on the wrong foot. And now here we are. Incredibly strong move. Not even a lot of leverage driving this move at all. Just spot buying. I think a lot of macro funds, macro allocators who care about these sorts of narratives like gold and debasement and that sort of stuff, like weak dollar. I think they've been the ones like driving this thing higher. That's why like this whole move feels extremely organic. Also quite just like it feels quite institutional, just like how it's just getting walked up, like in a relatively orderly fashion, aggressive, but it doesn't look like this is retail punters on leverage driving it for the most part. So yeah, here we are. I think you couldn't wish for much more than this. This is extremely bullish. We've broken out. We're now against resistance. We'll see if we can take that out, but yeah, I think things are looking quite rosy, I'd say. How do you guys feel about it?
Yeah, that's a good sum. But before I weigh in, Michael, I want to hear, I think your view on options and vol here. How did that play a role here? And also with short liquidations. I think that these are the two topics that I think are not getting talked about enough. How much can you explain this move by short liquidations here? Given how, I mean, ETH is even stronger, and that was maybe even more heavily shorted. And then, yeah, just like, what are you seeing in the vol markets as well?
Yeah, I think there's a strong spot bid, so that always is going to sort of like trump any I guess like specific like derivative positioning. So yeah, because it's spot driven, it does seem like this move is like legit in the sense of the narrative that is sort of coming, it's sort of unfolding is pretty real, and you like to see that, especially since we've been seeing a lot of spot inflows via spot inflows. You're sort of seeing like multi-session momentum. You get a bit of momentum in Asia session. You get a bit of momentum in the EU session. Same with the US session. So that's something that I really like, as opposed to something like, when, sometimes you have like maybe one participant, like for instance, Sailor, where that the bid's going to come in the US session, so you can get manipulated afterwards or before. So I would say just in terms of momentum, purely, this is really good. The other thing that you asked about is the option side. I think the one of the things that have been interesting is we've had a lot of pressure, right? That's I've been selling. I think Alex also alluded to this as well, where the market strength at the bottom when it was compressing was the fact that it didn't continually break down. It was absorbing all of the spot pressure, and then eventually I think it was just about sort of like the right presented itself. It creates this very, very strong spring, especially since we were in a period of real really at the lows. I mean, there was a time when the market is sort of like trading at 20 vols. That's expensive compared to like realized vol. So the vol market was pricing in like compressed volatility, but obviously it only can last for a certain amount of time, and I think that's what we saw. That I'm sure there was a bit of a squeeze in regards to just gamma. Like there was definitely a gamma squeeze as well. A lot of people who were sort of short gamma were offside, and you could also see that in dealer gamma shots for a long time. I think dealers were net positive, which meant that their majority of the market option traders were just correcting theta, and that creates the perfect opportunity for these sort of moves, where price is compressed and then the right narrative comes along, and then you get this sort of momentum where you didn't really get any stops along the way, there were not a lot of dips. I mean, the market did not break market structure on any sort of like medium time frame. Like I didn't see anything when I was looking short time frame, except for on Friday during I think it was just there was one more push up, and then the market found supply finally. And then we're sort of getting this sort of consolidation and chop now. Then so I guess like on the option side, it was definitely something that was going to happen. It was just waiting for the correct narrative to initiate this. I'd say there's an option gamma squeeze, but I wouldn't say that this is something that's being manipulated. This is, there's a narrative here. There's spot inflows that are backing this move. And you can see through just every how strong the spot bid is and the ETF flows that are coming in as well.
Yeah.
Good commentary. I tend to agree, and I'm of two minds on this. And I'm really, this somewhat was a surprise to me. I mean, we've said every week for several months to just, DCA and don't get too cute, but I tried to get too cute. And aside from long-term, bags, I basically was, kind of all in on gold and commodities, and was sort of waiting to buy Bitcoin for another month or two. So the copium, is like I feel it, but I'm of two minds. On one hand, like all the hard assets got a rip just at different times, right? Bitcoin, XME, and Bitcoin all got the same 20% move just at different times. It almost feels like, Bitcoin just sort of caught up through a short liquidation, and just for whatever reason, people were shorting this thing, at the 200-day moving average, which is kind of a silly thing to do. So yeah, it feels like this was just like people covering their shorts. And that, it's just along for the ride, and it doesn't necessarily mean that the bull market needs to necessarily begin now. That being said, this is a extremely kind of somewhat unprecedented move, and it's so far above the 200-day moving average, and it like you guys said, it's spot driven, it's institutional driven, and it does feel like it has legs. Now I would say, like, I think like 80K-ish is now your super strong resistance. And I just don't know how much is left in it between now and the end of the year. Like maybe we get to somewhere between 80 and 100 by the end of the year is now if I put my bull hat on. The question is like, what's the risk return at this stage, right? Now, I think, Michael, what you just said, I think options could be the way to play this. Alex, I think you mostly played this with options, which probably worked out extremely well for you. Vol still looks low. And so all right, the move happened. Some people caught it, some people didn't. Well, now what? It's hard to make a case for this coming back down to 60. Anything can happen, but I'm at least willing to say that that's not as likely. It's more that we chill here, or we continue to try to break through resistance at 80. But the question is, how do you play it? And if vol is low, what are your guys' thoughts on 6-month calls at 100 or something like that, or maybe even further out, as a way to just play the rest of the year?
Yeah. First of all, on 60, I mean, I would say if we get to 60, we might as well trade it back to 30. I think the only way we're gonna get back down to 60 is like quantum hits Bitcoin. Like I just don't see it. Just too many things, too many bullish things happening.
If we got a 10% correction in NASDAQ, if something happened in Iran, if like I don't know. I think there's like stuff outside of crypto that could just be like, okay, like we're just gonna, because like anyway, but sorry, continue.
Sure. On the option side, let me pull up our options dashboard. So the term structure is more or less flat here. So when you look at the money vol, it's like the whole term structure is basically low 40s here, which is, in my view, is still very cheap. We've just had a 25% move over 3 days. The market regime has clearly shifted. Like, this is not a dull market anymore. There is extreme, low time frame volatility, even on the weekend. So like 40 vol, which basically implies like a around 2.5% move per day, is, in my view, like way too low. That doesn't make sense. So like buying options, on one hand, in like a delta neutral fashion, like arbing it against realized vol, still makes a lot of sense here. I'm pretty sure you're guaranteed to make money on that trade. As for directional plays, if you look at like October or like end of year, like options trading at like 40, 42 vol, with like a flat skew, right? Like skew has been softening from like, -5 like a couple weeks ago, back to neutral territory. That's obviously still not like very like bullish positioning in the options market. Like in bull markets, we tend to get like +5 to +15 skew on like monthly options. So that's still quite low. So if you wanted to express a bullish view on Bitcoin here, frankly, just buying like options 2 to 4 months out, October to December at like low 40 implied vols makes a lot of sense to me. You're probably going to be right on the delta if the vol is cheap, and skew is most likely going to move in your favor if the market keeps moving up. So you're going to get a little bit extra juice out of these options. If you don't feel so good about spending a lot of premium on options that might expire worth less if the market just happens to chop for the next 2 months, what you can do is sell some puts to finance some calls or call spreads potentially. I would most likely structure that around some technical levels. 70K seems to be like the clearest sort of support line, 70 to 72. So maybe sell some 70K put to finance, some 80 to 95K call spread, something like that. I think that kind of gives you like a very decent return profile, but if the market doesn't do anything, you're not losing out, and you're also only participating in the downside under 70K, which is now a bit far away and doesn't seem too likely that we're gonna get below there. So overall, playing it on spot or like on futures or perps, very difficult here, just based on like overall technicals. And you mentioned risk reward, like you have to buy this asset after it's moved like 25% in a week.
It's really hard to buy right here.
Yeah, and like you're buying it straight into resistance. I think this resistance is gonna break, but it's it's a horrible risk reward. Meanwhile, with options, you get that optionality. You don't, you just pay up, don't have to take too much risk, and you can still participate. I think it's a very good like FOMO hedge to, like, if you don't have exposure now and you're not quite sure if you're gonna get a pullback. Who knows if you're gonna get a pullback? Just buying like some call options, long dated. Here, I think that's probably the most like rational way to get some exposure.
Yeah.
Michael, what's your favorite options play here?
I think I like the narrative, and usually when there's some new narrative, the vol also prices across the curve, and I feel like it's slow, but it will come, especially if we sort of continually see this sort of like repricing of a narrative, because I think we were very much sort of like trading. I think there was like fair value. I think that's why we chopped for so long. The market really found equilibrium at the bottom there. But as soon as this new narrative came, we've now started to reprice the value of Bitcoin. And that's what we're seeing at the moment. And I think, as I was saying, the back end is a little bit slow here. I think that's why we even have a flat curve. As momentum continues, you're going to start to see like this sort of like high front end sort of pull vols across the board up. So I do like the idea of just buying back in, and it's not that difficult now with the price of vol. I mean, if you even go and look at sort of like realized versus implied, you'll see that it's so like it's very affordable. Well, not affordable, but you could see that vol is still under implied vol is still underpriced. So you're not really getting sort of like a bad deal even after the move has happened, and that's why sort of options are really attractive. The other thing that you could also do is sort of like some form of like calendar spread. I mean, it would have been a great idea to sort of like short the front end as soon as this sort of like huge impulse move happened. Use all that premium to start like loading up on back end. That's also like a really good play, because you sort of get these situations where yes, we've had a very, very aggressive mispricing. We've had a very, very aggressive move on price, and the front end has gone really high, but now we're sort of like consolidating, and now you're seeing vols bleed a lot. So if you sort of timed this, if you timed your entries correctly on the front end, you would have done really well. And then just sort of like up on sort of back end vol, and I think you should be fine. I think the whole curve is going to sort of price aggressively, and I think has sort of already on the front end. You can collect premium if you're sort of strategic about it. I think you do need to sort of like play it a little bit low time frame. I think with the way I look at trading and the way I look at BTC on the low time frame, that's why I like these sort of opportunities where you could short like weekly after the move has happened, and sort of position longer term to sort of catch the move. So that's the way I would sort of get involved in this move if I was trying to chase it, if I'm looking at a time frame. But if you are looking to sort of like play this sort of longer term, I fully back what Alex was saying around just shorting. Like there's a new sort of like base where I think I've drawn a bit of a volume profile, and the base is exactly where Alex was speaking about. Like 70K is a really good place to sort of like short puts, and yeah, you do want to play a bullish. I think you do want to play sort of a bullish trade like on delta wise. I think the view is quite clean on delta, so a bullish risk reversal is really good. Bullish and you want to play the delta, that's a fantastic trade to put on. And if you feel like the market's not going to move, you can short. The vol can get rich on the front end, so you can just short front end calls or weekly calls when the move for the week has happened, when you've seen a huge impulse move, maybe like a 5%, on the day, then you can sort of like look at, okay, let me short some calls into this move where it's a bit rich, and then you should be compensated for sort of like this risk on the front end as Bitcoin prices. Yeah.
Oh, I was on mute. I like those trades. It's a good mix of short-term and long-term plays. All right. Looking at the big picture, and I tend to think a bit longer term here. I know asking myself, what do we know? We know that this is not a typical random move up. You can't ignore the flows that caused it. We know that, well, what sparked this was the Treasury buyback program. It wasn't a lot. It was like 2 billion. It's not a lot. It's what that signaled. It signaled that, like we said, the debasement trade is back on, and they seem to be willing to do whatever it takes to keep the long end in check. And so what does this all mean? This means that it's kind of what we've been saying for months. The administration is going to goose the economy between now and midterms, potentially even into Q1 if the Republicans hold on to the Senate. So you know, like there's the saying, don't fight the Fed. I think you kind of have to say, don't fight the Treasury here. And yeah, this feels like you need to have exposure to risk assets here. Do you want to do with an options play? Do you want to wait for a pullback and buy spot, or something else? But this feels like if you were like me, where you were waiting for some final capitulation, you no longer have to be in that stance. And you know, and it pains me to say that. So you now have to figure out, are you going to wait for the dip? Are you going to put on an options trade like we just said? Because you need to have exposure, you know, to hard and fixed assets here, commodities, Bitcoin, gold, TBD on tech stocks. They're a bit mixed here. You're probably not going to do terribly because, you know, there's stimulus. And unless something really bad happens with AI capex or credit, I think you're generally fine there. So so yeah, I think as you guys are shorter time frame traders, you wait all year for a time like this, and so this is like your Super Bowl. So this is the time to lock in, cancel the rest of your summer plans, and just plug into the screen here for the next few weeks probably, and figure out how to make some money. So just final words here before we wrap up. Either of you want to share anything?
Yeah, I mean, I can give a little bit of my just personal take on like outlook for the next couple of weeks. So we're obviously against resistance here. I've seen some people talk about on Twitter about this being you know, another dead cat rally, you know, that we're just gonna make another sort of lower high here, you know, this kind of sort of meme. What I would say to them here is, on one hand, when you look at just the microstructure of this move, it's been, yes, the first leg to like 69K has been there's been a lot of liquidations. That is true. So the move was kind of amplified. You see that with the liquidation numbers here, right? Just Hyperliquid alone, 10,000 Bitcoins liquidated. But then on the follow through, right, on this this walk up here, there's not been a lot of liquidations. So basically every short got taken out on that first move, and after that it's just been straight up spot buying pressure, right? Like you see that with the liquidations, and you see that on the open interest, which has just been going down. So we're looking at a market where that's been extremely sidelined, right? This was a dull market. I think a lot of people were in the same place as you, John, where I think a lot of people were hoping for like 50s, 40s, or even lower. So the market, I think, is still offside here. There's no leverage. There's meaningful institutional allocation happening right now. The market, it has extremely strong momentum here, and a narrative. We're against the sort of the bear's last stand. You could argue, like 80K. I think after 80K, like every bear argument goes out of the window. So what I would expect now is a little bit of chop, like consolidation, slower price action next week. I think we're gonna start testing 80K probably next week already. It's gonna like ping pong around there for a bit, but I'm expecting it to eventually break. Maybe it's not even gonna take that long. Maybe we're already gonna break through next week, and then once you break like 80, 82K, I think all that sideline capital that's that hasn't bought in yet and is not currently buying in because we're against resistance, I think all that capital is then gonna start chasing the market higher, and we're probably gonna be trading like 90s in no time once 80 meaningfully breaks. So yeah, like actually all I can say is like everything is bullish. You don't fade this sort of move in my point of view.
Yeah, well said. All right, Mike, take us home. Just quick thought before we wrap here.
Yeah, I agree with Alex. I don't think you want to fade. I think you're going to get a lot right now. This is where you are going to get a lot of toxic inflow because of just people trying to chase the move. But I don't think this is something you want to fade. It is because of the toxic inflow. Like you will start to get these when the market does correct. You'll get these opportunities to start building up. So I do think you want to start loading up. I think the other thing that is sort of the question is I think we still are looking for. Right now, we've had a break in market structure, I guess, like in the short term. But yeah, we still, I think under 80K, we're still sort of like, there's still this question around like, whether we will sort of like just chop or this is like some form of debt cut bounce. But the probability of that is low. I think the reason why we're so confident, and I think the greatest example of this is just looking at what happened earlier this year with the run-up from, I think it was the Iran war. You look at that bid compared to this, you will see that the difference is very much like, first of all, there's a lot of participants driving the bid here. It's not just one participant. So I think that's really good. There's a good narrative here. I think what Bitcoin was missing was an idiosyncratic narrative, and I don't think we had that with the last bid. We couldn't really figure it out. We knew it was just sort of like one participant, and that's why that move sort of collapsed. So I do think the narrative is pretty good. And yeah, you just be, yeah, as you said, John, you need to be locked in onto your screen in terms of being able to identify, when the market's going to be moving aggressively. But so far, so good. I think most of the volume that came, the initial move, they're already in profit. So that's a really good sign. You kind of just want to make sure like the market doesn't sort of like keep people underwater for too long. It needs to continue going high and high and not sort of giving people an opportunity to come in. And I don't think we've got that yet. I don't feel like we've had a dip, and that just sort of allows it gives this move so much more possibility it's going to go higher. So yeah, I agree with Alex. It's just be as bullish as possible and sort of position where any sort of like dips, you know, try and get a position in there if you've missed out.
Yeah, like very well said. It's funny that you mentioned like dips and like the market hasn't been giving any dips. Like it's very true on Bitcoin. But I logged onto Twitter today, and like people were like talking about like October 10 again. Like I saw like so many 10/10 tweets. I was like, what the hell is going on? Like check the charts. Like Bitcoin was trading 77K. Like I still couldn't get it. Then I scroll down my watch list and just, you know, see like Pump and XPL and like, you know, all of these coins, right? And they just had like amazing flash crashes. So if you were in front of the screen, you just got like instant like 20-30% dips that you obviously buy, and they immediately bounce back, right? Because like all of these folks that missed the Bitcoin pump, and like sort of the old habits kick in. You know, once you get like this first impulse of bullishness, like we're back in the bull market. Weekends are all season. Like I'm gonna lever the fuck up on altcoins, and we're just gonna make it back on those in you know, in a span of like 24 hours. So we just got like a gigantic altcoin liquidation today in the morning. Like Bitcoin didn't flinch. Bitcoin went down like 1 or 2%, but like altcoin OI just got, I saw like 600 million in liquidations like in 1 hour.
Wow. Oh man. All right, that is as good a place as any to leave it, guys. We've gone from a downtrend to an uptrend. Position accordingly. Thank you all. We will we'll be back at it next week to see how things went. We'll talk to you then. Bye bye.
Bye bye.